Hello, finance enthusiasts. Today we will explore how the Islamic world's coinage emerged and how these coins shaped global trade networks. The Dinar and Dirham standards developed during the Umayyad and Abbasid periods were not just a currency reform. They were a system that established economic stability and laid the foundation for international trade. Let's dive into the details. By the late 7th century, the Islamic economy was still heavily influenced by the legacies of the Byzantine and Sasanian empires. Byzantine solidi and Sasanian dirhams were still in circulation, but there was no consistency in weight or purity. Merchants trading between cities faced varying exchange rates, resulting in significant losses. Tax collection was disrupted, and state revenues became unstable. In this context, in 685, Caliph Abd al-Malik ibn Marwan assumed power. He quickly realized that re-establishing political authority required economic stability. The first step of reform was taken in 695. Initially, coins of the Byzantine style continued to be used, but instead of the emperor's portrait, they bore Arabic inscriptions in the Islamic declaration of faith, the Kalima. By 698, the reform was complete. The fully Arabic inscribed, pure gold coin, the dinar, entered circulation. Its weight was 4.25 grams and its purity exceeded 97%. The silver equivalent, the dirham, was fixed at 2.97 grams. The ratio between the two coins was clear. 1 dinar equaled 10 dirhams. This established a single standard for both state, revenues, and trade accounts. At the core of this system was the Islamic legal principle of riba, prohibition of interest. Gold could only be exchanged for gold, and silver only for silver, in equal weight and in immediate transactions. This eliminated speculation and exchange rate discrepancies. The state began collecting taxes, such as jizya and kharaj, in dinars. Dependence on the Byzantine solidus ended, and even in Byzantine territories, Muslim merchants began transacting in dinars. This was not merely an economic reform, it was a declaration of political independence. The new monetary system brought both stability and trust. In 692, Abd al-Malik suppressed Ibn al-Zubayr's rebellion, ending the civil war period and accelerating conquests. Across a vast territory from North Africa to the Sind region in India, a single standardized currency removed major obstacles to trade. Merchants no longer needed to recalculate when moving between cities, the first economic integration of the early Middle Ages. In 750, the Abbasids took power, establishing Baghdad as the new capital. During the Abbasid era, the dinar became not only an Islamic coin but also a global reserve currency. By the 8th and 9th centuries, Baghdad had transformed into the hub of trade networks. 4 major corridors radiated from this center. To the east, the Silk Road connected Baghdad to Samarkand, Kashgar, and the interior of China, transporting silk, porcelain, and spices. To the south, the Indian Ocean routes linked ports such as Sairaf, Sohar, Malabar, and Zanzibar, facilitating the exchange of spices, ivory, and pearls. The southwest corridor crossed the Sahara, connecting Sijil Masa to Oudoghost and onward to Ghana, with caravans of thousands of camels exchanging salt for gold dust at a 1-to-1 ratio. To the north, trade with the Vikings was conducted via the Volga River, through Etel and Bulgar. Today, over 200,000 Islamic coins found on the Swedish island of Gotland testify to the vast reach of this system. Trust was the key to this network. The purity of the dinar and the caliph's stamp made counterfeiting nearly impossible, reducing trade risk to 7 to 9%. Long-distance trade profits rose above 250%. Baghdad was not merely a capital, it was the global financial center of its time. This financial ecosystem was maintained not only by money but also by institutions. In the Mudharaba system, the capital provider, Rab al-Mal, supplied funds while the merchant, Mudarib, contributed labor, with profits typically split 50 to 70% in favor of the merchant. Losses were borne only by the capital provider, an early form of modern venture capital. The Hawala system enabled cross-continental payment transfers. A payment made in Baghdad could reach Canton within days, relying not on money itself, but on a chain of trust-based communication. The Sufte promissory notes, with terms of 3 to 12 months, operated with a risk premium in compliance with the prohibition of interest. The Bayt al-Mal, state treasury, regulated the money supply and managed the mints. Waqfs, charitable endowments, provided societal funding and credit. Qadi courts enforced contracts, ensuring legal security. This structure formed the backbone of both religious and economic stability. During the Abbasid era, the system reached its peak. Annual gold coin production reached hundreds of tons, and the Islamic world's trade volume exceeded that of Europe several times over. A merchant departing from Baghdad could purchase goods in India and sell them in northern Europe using the same currency. Basra, Aden, and Cairo were hubs of maritime routes, while Samarkand, Bukhara, and Kashgar were key nodes of land routes. This network facilitated not only the movement of goods but also the transfer of knowledge. Mathematics, geography, navigation, and early financial practices reached Europe through these channels. The 13th century Mongol invasion and the fall of Baghdad ended this period. Trade routes were cut, mints were silenced, and gold reserves dwindled. The Ilkhanids' attempt to adopt China's paper money system failed, as inflation could not be controlled. While the dinar lost its global dominance, its legacy persisted in European monetary systems. The Venetian ducat, Florentine florin, and even the Ottoman akçe all followed this standard. In conclusion, the Islamic coinage system was not merely an economic policy, it was a civilization-building project. The dinar was built on trust, standardization, and justice. This system laid the foundations for economic integration, liquidity, and trade security in the early Middle Ages. Even today, anyone studying the history of international money can view the dinar era as a historical laboratory of stability. Next week, in our video, How Empires Used Currency as a Tool of Power, we'll explore how empires throughout history leveraged their monetary systems as instruments of political and economic power. Don't forget to subscribe and turn on notifications to continue diving into the depths of financial history.